Hey everybody, today is Saturday, the 19th of June, 2021, and we had a little bit of selling this week. Nasdaq, however, did finish with a gain of 0.5% as it held on to its breakout. Russell 2000 got hit the hardest, down 4%, and the Dow down 3.5%. Actually, the financials were down the worst, 6.2%, and that's why you don't buy the dip. Let's talk about these charts here. So on the daily time frame, you can see we undercut the 50-day moving average. That's why we don't buy pullbacks the 50-day either. And now we're looking at these two volume weighted average price levels early next week from this low in March and then right here in earlier March as well. Those would bring us down to first level at about 412 and then at 405. I don't think 405 is likely, but the trend is lower, so we have to look at that as guilty till proven innocent. After that Federal Reserve meeting, we saw that the market did get stuck underneath the declining 5-day moving average, and we always turn cautious in those conditions. So no one should have been really hurt badly here, not with any new positions at least. The Nasdaq, as mentioned, held on to its breakout to new all-time highs and closed at the highest level it has on a weekly basis. We were down, of course, on Friday, but one day off of all-time highs doesn't look like bearishness to me. We're right at a rising 5-day moving average, and next week we'll be a little bit cautious because the broader market is showing some weakness. But again, we're above a rising 20 and 50-day moving average there. Russell 2000 is where we saw the bigger damage, and we undercut these volume weighted average price levels. We got right to the high end of that range, and as always, we ask ourselves, how did it get there? It rallied from 211 to 234, making a breakout extended and low probability, high risk. Instead, we saw the market drift lower, and we were below that declining 5-day moving average almost all week here, showing that it made 0 sense to be a buyer. You don't buy when the 5-day moving average is declining. That's just a basic concept there. Semiconductors also saw some weakness. They're still above the 50-day moving average, and in that bigger range, this pattern that we have been drawing out kind of got broken a little bit. So let's just clear that up. And the volume weighted average price off of this May low is, pretty much comes together with the year-to-date volume weighted average price. So if we see continued selling in the semiconductors, that would be a key level to keep an eye on. And of course, if we see the semiconductors continue to sell off, there's no way that the Nasdaq will hold on either. So be aware of downside levels in there, maybe near about that 20-day moving average. Biotecs, they're setting up beautifully. This is just this is exactly what we were looking for. We didn't chase this rally over here, and instead we thought maybe it rallies up a little bit and then begins to pull back. Well, on Friday we saw it, that range starting to tighten up a little, right at the 5-day moving average, which is declining. So I think early next week, what we'd be looking for, that is Monday or Tuesday, we'd be looking for something like this to happen. Let me grab that pencil and see something like this happen. And I think we would want to be a buyer of the Biotecs if they continue to develop in this way. That 5-day moving average, flattens out, and we see a higher low. And be a buyer over here. This is again just a classic low volume pullback to a prior area of consolidation. By the way, please note I'll have the trade ideas video up by tomorrow, and our webinar this week is being switched to Tuesday. So again, the webinar is not on Monday as it typically is, but instead on Tuesday. XLF, don't buy the dip. People who buy dips below a declining 5-day moving average, we sketch out possible scenarios. This is one we thought, hey, maybe the financials will do this. But while they're below a declining 5-day moving average, only uneducated money makes new purchases. That's the way it goes. If you feel insulted by that comment, re-examine your strategy, because it's not the right one. Buying dips is a foolish thing to do. We buy after the dip, which is what we're trying to do in the Biotecs. Now the Biotecs, I outline this. It doesn't mean that's what's going to happen, just like we saw in the financials. It's a potential scenario to be aware of. and the potential scenario drew in the financials never came to fruition. There was no reason to buy. Instead, people got slaughtered in there the last this week as it was down. Like I said, what was that, about 6%, 6.2% for the week, and month to date, those financials are down 7.27%. If you look at the bigger picture, we're still in a major uptrend. Perhaps we come down to the year-to-date volume-weighted average price, but that's down at 34. The path of least resistance is lower. Don't be a buyer. It doesn't make sense. Energy names, as we know, got hit also. We got stopped out of a couple of those names with small losses. And again, they're below declining 5-day moving average. Just stay away from them. Give them time to set up, and that'll do it.